Commodities are slumping to their lowest levels in nearly a year. Well, for some perspective on this slide, we're going to head now to the CME Group, where Scott Bauer, president of SIB Equity Options, is standing by. Scott, good to see you. What a week. And at least the sell-off in equity seems to have abated, at least for the moment. But in commodities, we're seeing a little bit more of the same thing we saw yesterday.
Yeah, it's kind of catch-up time right now, and it's really interesting because as much as we see gold selling off, and all the focus is on gold because we're down almost $300 from the high that it set, a couple weeks ago. If you look at some historical charts, and if you look at the ratio, the gold-silver ratio, which is something I follow pretty closely, you'll see that right now gold is still actually a sell and silver would be a buy. What we do is, if you look at the 3, 6, 9-month, 1-year ratios, we've been in the 40 to 43 range of gold to silver. We bottomed out back in May down at 31, which was just the time of the last couple years to buy gold, sell silver. We're now, with the decreases today, especially in silver, the percentage decrease, we're now in the mid-50s, which over the last year, 18 months, that's a level that tells me sell gold, buy silver. Now, this is a trade. This is something that I would look to do only in the short run. If you look historically over the 5-year, 10-year, 20-year time frame, this is right in the middle of the range. But if we're looking at that 12 to 18-month range, this is really an opportunity to sell gold, buy silver, even with this massive, massive sell-off in gold that we're seeing.
Scott, at any point in time that where this relationship breaks down, I mean, there's so much going on in the markets right now. We've had changes in margin requirements. We've had so much significant losses. We've seen so many significant losses in other asset classes. I mean, it may just be that this ratio doesn't hold at the moment.
Absolutely, Lisa, and that's why I'm urging, and that's why I'm saying this is a short-term trade only. This is not something to put away in a portfolio because technically it looks great. But if, like you said, fundamentals have broken down and we're now breaking out of that year or 18-month trend and now breaking into a more historical 10-year, 20-year trend of gold, silver, then we could see this thing expand to 60 or 70. So that's why right here, right now, for the short run, this is the trade to make. I would put a stop on this trade at about 60, which is not far from here. Right now, I think I'm looking over gold and silver. I think it's about 56 to 57. I would put a real short stop on this, but look for this ratio, if the market settles down, to be back in the mid-40s, I would think by Monday, Tuesday, Wednesday of next week.
All right, great to have an actionable item or idea here to put on, take advantage of some of these swings. Thanks so much, Scott. Appreciate you sharing it with us. That was Scott Bauer, president of SIB Equity Options. Okay.